Hello, everyone. Welcome back to the Daily Gold YouTube channel. If you're new, welcome to the Daily Gold YouTube channel. Thank you so much for joining me. This video is being recorded on the evening of Sunday, January 26th, 2025. So in this video for Macro Mondays, I am going to tell you the two things that always lead to a recession. So without further ado, let's get to it, and I'll tell you in a couple seconds. Okay, so the two things are higher commodity prices, which cause inflation before a recession. And the second thing is steepening of the yield curve after an inversion. So those are the two things. I hope you'll continue to watch the rest of the video with me as I'll analyze these factors. And first, this is a chart of oil and recessions. Just easy, simple chart. I love to see the last 10 years, but it's just a free chart I found on Google Images. Perfect for what I'm talking about here. And we can see here, the circles precede the recessions. These lines are the recessions. And we can see basically every time except a double dip, recessions were preceded, if not caused, by big increases in the oil price. So, and look, if oil prices are going up, we know that commodity prices as a whole are going up. So this is another chart, not quite as good as the last one, but I like it a little bit better just because it has more history. I was about to say it's more recent, but look, this cuts out COVID. So this is from Double Line, Jeff Gunlock. Commodity prices in blue, the shaded lines, those are the recessions. By the way, I love stock charts. I'd love to see if they could figure out a way to have these recession lines go into their charts. That would be fantastic. But anyway, back to what I'm talking about here. Again, we can see, look at the blue line. I mean, we know the 70s. You get higher and higher commodity prices. They cause inflation. Or it's one cause of inflation, but we know that higher commodity prices means inflation and higher prices. That is going to cause a recession eventually. I mean, look, in every case, this is one case here in the mid-90s. It did not happen. Now, remember, in the mid-90s, I think you had a strong dollar. You had emerging markets that were really hot in the mid-90s until, you did have the Russia blow up, I think, in 1998. You did have Southeast Asia, I think, in 1997, but they peaked, I think, 95-ish. So that's part of the reason why this did not cause a recession. Remember, you also had technology making a huge impact. So you had all these deflationary factors coming in, just in a strong economy in general. But anyway, that's for another time. So again, we can clearly see here, rising commodity prices. Look, in almost every case, they cause a recession. Okay, I don't need to belabor the point. So last chart here, which I'm going to talk about for a couple minutes, and in reality, probably more than a couple minutes. My various macro market indicators here. We have the yield curve, commodity prices here. That's the CRB. The 10-year yield, which I talked about, I think, in one of my very recent videos. And we have the stock market, the S&P 500. These two lines here, one of them marks the peaks in commodity prices. The other one, I think the red one is the peak in the stock market. The blue is the peak in commodity prices. So you can pause the video if you'd like. You can take a look and see how these peaks, commodity prices here, stock market here, you can see how these peaks are very close together. It's not the same every single time, but you get the point. Now, I also put them here in 2022 because we did have a recession as far as GDP. There was 2 quarters of negative GDP growth. There was a recession, but the NBER did not deem it a recession because if you look at consumption, income, production, you might remember that formula from Econ 101, the various economic factors, like those statistics, they did not turn down like they normally do in a recession. So the top line said there was a recession, but if you looked at the actual economy and what was going on, it was still moving along. It was slowing, but it was still moving along. Like the factors and those statistics, real income, consumption growth, retail sales, they weren't in a recession. So that's why they didn't call it a recession. But anyway, statistically it was, and you did have a big increase, as we know, in commodity prices then. But again, the major points here, we have the yield curve. We've talked about this before. It's bearish for the economy when it goes from inverted negative territory to steepening. When it's inverted and it starts steepening and it goes above zero, that's when it's really bad. So it's moving above zero. We're in trouble here with where it is now. But if you think about in 2007, we think about where the stock market peaked. I mean, the yield curve was actually at a similar level. So this had steepened a fair amount already before the market actually peaked. But I've discussed the yield curve and peaks and the 10-year yield in other videos. Let me focus on commodity prices so we can see here the various peaks. So again, this one, statistically a recession, but not technically. Then you have to go back, and this was obvious. Remember oil going to 150. So this huge move caused a recession. Then in 2000, this is when people actually forget this. You had the recession in 2001, but look at commodity prices. Like, this was not an insignificant move. I mean, we could go back and look at oil, for example. Look at 2000. So here's 2000 here. This is oil. So oil and commodity prices as a whole, I mean, this was driven by oil, but there was a move up in 1999 during the dot-com boom and bust. There was a move up in commodity prices in oil. In 1990, I mean, that was driven by the first Iraq war. And then, of course, we know the 70s, I mean, huge moves, double-dip recession in 80 and 82. And as I said in a very recent video, another thing to look at is when the 10-year yield peaks. So these blue arrows, these are the peaks in the 10-year yield. I could have put another one here. But we're looking at this here. Is this a peak right here? Are we about to peak and turn down? Or is there going to be a final thrust up like that? I'm not sure. But if we think, and so getting into the CRB and commodity prices, I haven't got to this, which is important. This is where we are right now. And if you look at GCC, that ETF, it's actually a better indicator for me because it's a more equal weight. This one's dominated by oil. GCC is a little bit stronger than the CRB. But look at where we are with respect to commodity prices. Okay, these are moving up. So if this thing moves up, it continues to move up this year, and at the same time, you have this steepening yield curve. I mean, these are powerful factors that not could, but they probably will lead to a recession. Especially if you get a continued, if commodity prices, you really get some legs moving here, a big move up to 350 in the next 3-4 months, combined with a steepening yield curve, I mean, that's going to cause a recession. And at the same time, of course, got to watch the 10-year yield. And just the final point, I do think at some point in the next year or so, we are going to have a recession and statistical inflation will come down. The rate of inflation can come down. So if you get this continued pop in commodity prices, maybe you get a weaker dollar at some point. That, again, for the third time, along with a steepening yield curve, that can cause a recession. So you have to be a little bit careful about getting too bullish on inflation, even though we could see a spike, like a mini spike, over the coming months or the first half of this year. And if we see that, that's recessionary. That's not an indicator that we're about to really have this inflationary spiral. I think the inflationary spiral is going to come after the downturn. That's all for this video. Hope you liked it. That's what you have to remember. Steepening yield curve above zero after an inversion combined with an increase in oil/commodity prices, that's a recession. Those are the two things. Thank you so much for tuning in. Let me know what you think of the video and in a recession and these two factors. If you have other factors that you think are more important, let me know. I'd love to hear them. Leave a comment. Thank you so much, and I'll see you guys again in the next video.